is down ahead of the OPEC Plus meeting and amid a rise in active oil rigs in the US. In the coming sessions, the oil market is likely to continue the phase of correction. Meanwhile, the ruble is expected to retreat to the level of 78 against the US dollar. However, the American currency is losing ground across the board, which can keep the ruble away from a deeper fall. On Monday morning, the global market sentiment was largely negative. Oil prices continue their correctional decline. Thus, Brent crude futures with the nearest expiration were down by 2% to trade below $48 per barrel. Likewise, WTI oil fell below $45 per barrel. Investors keep monitoring the news on the vaccine development and the virus spread. Besides, market participants are getting nervous ahead of the OPEC Plus meeting. Investors expect the members of the alliance to delay the increase in oil output by 2 million barrels per day planned for January. However, not all producers are ready to agree with the deal extension. Today, we may hear some statements from the OPEC Plus that will help form the market's opinion ahead of the meeting. The final decision may push Brent quotes lower below the level of $45 per barrel. Another factor to limit oil prices is the rising number of active oil rigs in the US. On the other hand, the recent data showed that China's factory activity is expanding at its fastest rate in more than 3 years. China is on track to become the first major economy to fully recover from the coronavirus crisis. This week, markets will get first results on the Black Friday sales season in the US. The data will show whether US consumers have switched to the saving mode during the pandemic. The downbeat data will definitely trigger a sell-off in risk assets. Market participants will also focus on manufacturing and services PMI in the EU and the US. Special attention will be given to the report on the US labor market on Friday. These indicators will surely influence investor sentiment. Amid the negative background, the ruble is likely to retreat from the levels reached in the previous session. First, the dollar-ruble pair may settle above the level of 76 due to the negative dynamics in oil and moderate decline in emerging market currencies. Then the US dollar may attempt to move higher, so the pair is expected to trade in the range between 75 and 77.50. The ruble also suffers from profit-taking that happened after a rally caused by vaccine hopes and expectations on additional financial stimulus in the US and Europe. Overall, the ruble is staying strong, and some traders think the pair may retreat to the 75 mark. The Russian currency could gain local support from the sales of foreign currency carried out by non-resident companies in Russia. That's all for now. Thank you for watching, and we'll see you back on our channel soon. Bye!